The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
27th of October, and yes, I was away for a little while on vacation, although I must say working vacation, because I certainly got out my newsletter every single day. I never thought I'd be able to do it every single day, but I did. And the fascinating thing is, here I am back, and that was yesterday. I opened up I had my program running. Actually, my program was running all the time. And through this wonderful medium of technology, as always when I'm overseas or anywhere out of my office, I can get to it via an automatic, I can go through it with my PC. And it's fascinating that I'm able to just continue as if I was right there in the office, except if, for any reason, the power goes out and my computer shuts down. I need somebody to come in to the office to press the button to get it back on again, because I can restart, I can do everything, but I cannot press the plug to be able to start the computer. Everything worked absolutely fantastically. Then I got home yesterday on late Saturday night, about 1 a.m., 13-hour flight from Sydney, Australia. Beautiful place. Great orchestra. I went to a wonderful concert, and Sydney Symphony Orchestra. And lo and behold, everything's working fine. Then out of the blue, my main monitor, I forgot, 1, 2, 3, 4, 5, 6, 7 monitors? 7 monitors in front of me. My main monitor that I use for my daily report and for my show, etc. What happens? It just blacks out. Gone. And of course, everything shows up on that monitor that you click yes and you go to your different programs. So here I am. Everything worked fine overseas. I don't know. It could have been amazing if it happened while I was overseas. That would have been terrible without that monitor. I could have used this particular computer that I'm using right now, but the notations were behind. I hadn't updated them. It would have been a nuisance. And then, to top that off, one of the other programs I needed for this morning so you could see me live wasn't working, but wonderful. We've got Al, my great engineer, got us all organized, and I'm right here. Well, the Dow is up 6, having been down to the, the Dow is at 16,812. It had earlier this morning been all the way down to, let me just check that out. It had gone down to 16,729, 80 points or so. And look what's happening. All of a sudden, you've got a new recovery high. The most important, one of the reasons why, while I was away, we were in a sell mode. We were short. Just the most number of short positions we've had in a great deal of time. And one of the reasons why, as we made that low on the 15th at 15,855, I immediately started to think of covering. We were covering. And then what happened, and this is, I thought, was really important. There was a volume spike, a low bar. And that is a technique that I developed a long time ago. Now, it wasn't the most number in volume. It wasn't the highest volume. But it was a volume spike. And that said, be really careful, which forced me to cover all our shorts and to take long positions. Long positions have done unbelievably well. And most importantly, we've been trying to add to those. But you remember what I said, and I made a big deal about it forever. I talk about the volatility index, and that spiked into the 30s. Can you believe, into the 30s? I talk about the characteristic of a bull phase, and that depends on your time period. And the characteristic of a bull phase is that consolidations are intraday or very short, no more than 1 to 3 bars, that is 3 days, if you're looking at a daily chart. Invariably, it's less than that. It's no more than 1 to 2 days. The characteristic of and the volatility index starts to go down. The volatility index in a bear phase is that volatility index says it's going higher. And most importantly, all news is taken as bad news. Whereas in a bull phase, any news is taken as positive. In a bear phase, everything is taken as negative, and you just keep landing at the low of the day. Every rally looks like, oh, this is it, we're going to start a rally. Whew, turns around and closes at the low of the session, or the low of that bar, if it's, say, a 120-minute bar or a 60-minute bar. And that's exactly what we got. Now, it's fascinating. Why? Because it's one of the strongest legs to the upside that we've had in quite a while, since the August low. The Dow's only made that, remember that IBM fiasco, where that was the October the 20th, IBM dropped 15 points or so, and that impacted the Dow, but the S&P acted beautifully. And one of the reasons why we actually missed it, but we've been trying to go long, one of the ETFs, one of the triple ETFs, and have been missing it, is that this particular phase, certainly the 120-minute chart, which went to a buy mode very quickly, this particular phase has not yet given a buy signal to buy mode indication in the technicals of the daily chart of the Dow, but it has given every indication that the characteristic here is with the very first statement. The characteristic right now is to say that everything is being taken as a positive, as the volatility index, let me show you here, VIX.X, the volatility index is under the 9-period exponential moving average. It made a peak F top, I haven't updated this, I'm sorry. It made a peak F top of 31.06 on the 15th. That corresponded to the low in the market. Now, it's fascinating that, remember lows, I spoke about this before I went away. I said that when you're looking at lows, very often, because of the nature of fear, you get lows coinciding within a day or two of one another, if not the very same day for the majority. Highs do not do that. Highs can rotate through, remember IWM. The IWM is the Russell 2000. That made its low. That made its high way earlier. That made its high back in July at 120.97. You had to wait until October, September, before the general market made its highs. Now, this is very interesting. Why? Because today, the IWM went right to 109.48 is the 9-period exponential moving average. And what was the low? The low was, let me find it here, IWM low. Let me move this chart a little bit. Was 109.51, missed it by 3 cents. And now we've bounced back up. So this is leg B, going to peak B on Friday in the IWM, the Russell 2000 iShares. Pulls back for 2 days, hits the 9-period exponential moving average. Now this is different. Here I have no choice but to put in an up arrow, because the stochastics at 88%, the MACD is expanding, the histograms are very powerful, and it hit the 9-period moving average, and it's bounced, and this says there's a really good chance that the IWM is going to go to a leg C, and that leg C would be at 111.59. 1 penny above that 111.58 peak B, and the 200-period moving average of 111.89 would become your upside target. Now, the day's young, we could still have another reversal, but that's the technique that I use, that I have no choice but to say I have a signal to sell mode completed to the downside in the IWM daily chart. And the daily chart has gone to a peak A and then to a peak B, holding the 9-period exponential moving average with all the technicals positive. And even if it reverses here, that will be a failure pattern with the up arrow. But my technique says going right back well into the 80% area, 88% in this case, 87%. Then the slow stochastic says that there's a really good chance that you will make a leg C. Now, that does not say we're going to go to all-time highs or recovery highs. It just recovery highs, and that would be a move above the high of the 23rd. Now let's just run these numbers. You've got the Dow up 17 at 16,823. SPX.X, that is the S&P 5. Sorry, I just don't have these updated. I had to grab this at the last minute so that I could do a show because I do not have my screen ready for my usual notations. This is only leg A, and if there's no new high above today's Friday's 1965.27 high bar, and we're about 60-70 cents below it right now, that would make a peak A. But so far, this is outstanding action. Let me just show you something in the E-mini. I should have showed this earlier because it was in C, and I was going to talk about it going to at peak B, going to leg C. So the 10-minute did that low bar down at what time was it? On the 26th of October. It went to 1957.50, ran up in the 10-minute chart to a peak D, 4 peaks high. Remember in the Chapman wave, we're always looking for 4 peaks in a buy signal to buy mode uptrend. And on the downside, we came down to trough D, ran up to an A, to a B, made an arch formation, started a brand new A, B, C. Trough D has been made. Yes, it could also be a G/C. And then what happens is you get a very powerful move in the stochastic and the MACD. Just look at that move, rising with a divergence between the low of in the E-mini, the low at on the 27th at 1948. It goes down to 1944.50 as the stochastic is running and the MACD is turning up, and lo and behold, we're getting leg C right now. So it doesn't matter what time frame. The Chapman wave methodology is the waveform that never sleeps and is working all the time. Now let's continue. So the QQQ series we just did, the IWM, QQQ series is still leg A. The Dow is in leg B, could be a possible peak B today. S&P possible peak B. Whoops, mistake. INDU is leg B still. It's just the S&P that could maybe be in a peak B. And now what we're going to do is we're going to go to the TLT. The TLT made I can't remember now, was it A, B, C, D? I believe that was a peak D or E on the 15th of October, right there at, we've got callers online. I'm going to get back. Callers online, that's great because they want to talk about gold. I missed out on the gold here. Just talking about the TLT, up 33 cents at 120.05. Basil Chapman, Tiger Technicians Hour. Great to be back, and I will be back with our callers, Mark and John, straight after this break. Most important commercial break.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We are back. Basil Chapman live. Tiger Technicians Hour. I must thank John Logan for allowing his show to be used many times for this hour. Great show as always. Thank you, John. Thank you, Steve Rose, for a great 2 hours before my show. And we got programming right through Tom O'Brien wrapping it up. 4 o'clock till 3 o'clock till 5 o'clock. Tom O'Brien. And don't forget, folks, Steve's got should be a fabulous webinar coming up on Wednesday. Check out the front page of TFNN. Let's go to Mark in Denver. Mark, how are you?
Good, Basil. Welcome back.
Thank you.
Anyway, so I have been watching the GDX and trading the Nugget in new GT, which is the triple of it, based on that. And so there was a really big 2-point bar on October 8th.
Yes.
That had a pretty high spike in volume. And I was kind of watching that bar to see if it was going to test the high of it and fail or the low of it and hold. And it did that 2 days ago, and when it was doing that, I decided to go along the Nugget, which is the 3 times, thinking it'll at some point test the high of that bar, which would give you a pretty nice percentage move on the Nugget in UGT. So I bought it 2 days ago. It's struggling a little bit here, but above where I bought it. Wondering what your thoughts are, if you have a wave count on the GDX on the daily and weekly, and what your thoughts are on that.
So let me do this. On the GDX, of course, I've got a different, I've got a program from same TradeStation program, but a different iteration on this particular computer that it's really like a backup. So I haven't got everything updated. But I tell you what I do have. I have a peak C, then a peak C1, C2, C3 in the weekly chart with a GDX, which is the Market Vectors Gold Miners ETF, going from the 2803 high of the week of the 14th of March, then a little lower, 27.78. So that's just 27 cents lower on the week of the 11th of July, and then slightly lower again, 27.63 is the high of the week of the 18th of August, and then it plummets down. It's made lower lows. Now, this is very interesting. It went to 20.11 the week of the 10th of October, and then last week it went to 20.05 here, and now the low today is 2015. So this is a really important phase, but this is what I'm looking at. You know how I talk about when the slow stochastic is up in the high 80s, it's good. When it's in the 90s, it's outstanding. That's the best case scenario when you've got a stock. I was asked in the den a moment ago by Jason whether or not about Facebook. And if you look at Facebook, Facebook is the stochastic is now at 79%. There was a period where it was, and that's the weekly chart. Let me just look at the daily chart. That's really the one I want to look at. Yeah, the daily chart is at 93%. And not only that, you've got what I call the squash between the slow stochastic and the fast stochastic. The slow stochastic and the MACD in the daily chart. Those are ideal circumstances. When you look at the GDX, or we'll look a little later on to the GLD, you'll see that it is the inverse of what you expect for a positive diagnosis or analysis of a particular tradable. And in this particular instance, the GDX is trading in the weekly chart with a very long-wick candle, the long-wick candle of the 10th of October. It had a retest, went fractionally under it. The prime importance of a candle like this is that the body of the candle becomes a little bit of a magnet, and that if it was to close below, now this is really important, if it closes below the long wick candle's low bar, in this case the 20.11, that would suggest that there's at least another bar with a lower low to come, and then there should be another retest of the candle. That implies to the upside as well. But so far, since that high candle, that long wick candle of the 10th with a high of 22.16 and a low of 20.11, that over 2-point difference has seen lower highs in each candle in each week since. So that means that if I'm looking at this, it's very different. Look at the, if you're looking at my charts, folks, if you're looking at Tiger TV, you will see that the candles that were testing lows back the week of the 6th of December, the week of the 13th of December, the week of the 20th of December of last year, and the week of the 27th were just very minor lower lows, but they were very interesting candles, and there was a nice, beautiful green-bodied candle before it started on the way up. So now I'm going to put that in perspective, and if John in San Jose doesn't mind holding on, I'll talk a little...
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back, and let's see, we're looking at the Dow up 9, S&P's down 3, and sorry, John, if you were holding on too long, my mistake, I should have got to you, but we're talking about the same thing, so hopefully you can listen. We're going back to Mark. So, Mark, this is what I wanted to say. There's a rectangle, as opposed to the arch formation that I like to look at. The most important thing that I'm looking at here is that in the gold contract itself, if you look at the continuous contract, it's represented very well in the monthly chart of the GDX. And the monthly chart of the GDX, which I've been talking about for absolutely ages, says that the arch formation, or the lowercase h formation, that then becomes a lowercase m formation, a continuous pattern, has made slightly lower lows in the GDX, but in the GC contract, it has made one. It went to 1182.30, 1183.80, 1183.30. So it hasn't yet. It is so close to taking out the 1182.30 level, and that's in the continuous contract, and that was the low that was made back in June of 2013. So my most important criteria is that the trend in the monthly chart, as far as I'm concerned, so far, as we're speaking, still remains very negative. The weekly chart has had it has had the opportunity to rally, but last week, instead of being weaker, it should have been stronger. And so far this week, we're looking at just 2 hours of trading, but the price of the gold contract in the continuous contract is under the 9-period exponential moving average, and the MACD has the potential to deflect lower rather than to cross positively. So here's what I'm going to say to you, because you do have a very potent weapon there if it works, but you also have a very potent weapon if it doesn't work. So I don't know what you were going to use as a stop.
Yeah, well, I got into the nugget at around 1840, and it proceeded to pop all the way up to $20 in like a day, and I should have
round number $20, right? Yeah, and that was a beautiful percentage move on a short-term basis.
I should have taken my profits, but I didn't. I had a kind of a stop in just below where I bought it, which I'm thinking about moving up now.
So that was a stop that at that point you hadn't thought it was quick, so you never really thought that you should raise it because there was a chance that it would move higher. Okay, Now let's do this. I'm going to do something completely different to your question. I'm going to say to you, if you have a particular predisposition towards something, and then it doesn't happen, or it does happen, but it happens quicker than you expected, and then it goes back to a position that says, oops.
Yeah.
That oops is telling you a story, and I would say that you'd be fortunate to get a second chance at a big move up.
Right.
But at the same time, you've got to respect the fact that it didn't have follow-through. That's just the most important thing. So psychologically, you were in exactly the right position, and now you've kind of got this thing saying, oh, there's a little thumb on the nose wiggling its fingers at you saying, where, and that's the trading gods, the lowercase t, lowercase g. So when that happens, I'm going to suggest to you that because the MACD started to rally very strongly and the histogram was very positive in the daily chart of NUGT, the direction shares 300% long gold, and the stochastic rallied, and now they've both. No, the stochastics turned down, and the MACD is still acting quite well, but the price is acting very poorly. I'm just going to suggest don't take a loss. That's the most important thing. Okay. You can always get back in, even if it's at a higher price, but you don't want to be stuck twice. First of all, not having taken profits, and secondly, just by poor money management. So I'm just going to say to you, I think you've got the right plan. You've raised your stop. You're making sure now that you're going to at least protect your capital. Right. And that's the best that you can do. And why? Because the dollar has been acting quite well. And I'm going to try to do this just real quickly to cover. I don't know what John in San Jose was going to ask, but I'm going to try to cover that as well. Because I just want to show you that the GLD contract, 120-minute chart, is just a little bit better than the GDX. And the GLD, I put a little more weight on the GLD 120-minute chart, except that the stochastic, your mom was talking about the stochastic up in the 90s. Well, when the stochastic is down in the 8s and somewhere like that, the GDX was, that's not very good. But the GLD is at 16%, and that says there could be a little bit of an M pattern right here. And if the dollar, I just want to cover this now because a lot of people have been asking me over the last week or so, sending me emails about gold, and I've been saying I see nothing in gold yet, but we're getting close. This is the first opportunity for gold to actually have a little bit of a bounce, another bounce, because if the dollar starts to weaken, it's at 85.50. On the index right now. It held the 120-minute chart twice and tried to spike, but it hasn't been able. Whoops, excuse me. It hasn't been able to hold that position. So that tells me that there's just a chance that gold could have a little bit of a pop here. The dollar's still acting pretty darn well. Gold is acting pretty poorly. So this is the moment where it has to work. Keep your stop tight. And what I'm going to suggest to you with Nugget is that if at all you can see a pop from the 18.82 into the 19.13 area or higher, raise your stop on part of your position and just make sure that position that you raise the stop on, if that's taken out, then the portion that you have left, I'd even raise the stop on the portion I have left.
Okay. Do you think that GLD is going to, it looks like it's in a daily peak, it's made a peak C. You think that's going to hit a D, and if it does, that might be a good time to jump out?
Oh, absolutely. What I would do is if the GLD goes above 120.50 in the next 2 sessions, maybe 3 sessions, I would say it has to be 2 sessions. But if it is 3, then I would do this. The moment it breaks past D, past C at 120.51, I would immediately raise my stop. Or you could take something off your GDX and raise the stop on the rest. On your Nugget, I'm sorry. On your NGT.
That's kind of what I was thinking.
Yeah. So thanks for calling and good luck on the trade. We'll be watching it closely. That was Mark in Denver. Sorry, John, if you want to call back, but we've got Jerry in the back bay. Jerry, how are you?
All right. How was Australia?
You know, we've been there. This is the 3rd time. It's just a very, very beautiful city, and I'm very fortunate that my brother is a senior city planner, and a lot of roads that we went on, he discussed them. He was involved in their planning, etc. And one of the things that they do there that I've always thought is just it shows visitors all the time talk about it without realizing what it is that everything that they do in terms of roadways, bridges, pathways, and pedestrian crossings is all done environmentally, so that there is a design aspect that pertains to the botanical, to the topography, to the environment, to the botanical aspect. It's very bad. The botanical gardens is very beautiful. We enjoyed it very much. It is so far away. It is so far away. It's not a weekend trip.
Nice special trip. The MDY, the mid-cap index.
Yes. So let me just tell folks what it is. We're looking at the S&P mid-cap depository receipts trading at 249.31, down $1.45. Had a beautiful leg A. It made a peak A on the 23rd. It went to 251.24, and on the 24th it went to 250.70. Yep, 77. Fractionally lower, so that is a peak A, but the stochastics at 91% is producing the pattern that I call the squash. It had a very high volume. Now, what I had said to my subscribers while I was away, that we're going to look at I call it a climactic low bar high volume spike. And that very often produces 28 sessions, and it can even go to 54 sessions. That doesn't matter whether it's a 1 minute or a month. No, it doesn't work on monthlies. It works on dailies, shorter term, and it works also sometimes on a weekly, but I like it on dailies. If, in fact, certain criteria are met within the by Wednesday afternoon or Thursday, I'll have a much better reading on what the volume spike of the low of the 15th at 230.81 on the MDY, what it represents. But based on my pattern that I call the Chapman wave squash formation between the stochastic and the MACD, what I'm looking at here is the potential for a very high-powered push to peak A, then a very brief pullback, leg B starts. Perhaps you get a 1 to 3 session pullback for C, and then there's a bigger timeout as the stochastic pulls back and the MACD. So the stochastic is the torque. It is the gear that starts you off, goes quickly from first to second, goes to third, and then the momentum of the MACD, the fast moving average, that green line that I'm pointing to right there, that has to take over to get you to D. So far, 246.48 is the 9-period exponential moving average. That has to be key support. You can go under it, but you need to close over it. And because of the power of the move from the 230s up to the 250s, I would say, yep, I would allow for a day, maybe 2 days maximum under 246 on a closing basis. I'd prefer not to see it. I'd rather see B come tomorrow or the next day, leg B above 251.24, but I like it. Now, Jerry, are you long still this position?
Yeah, I've been long several years, and I'm still thinking we're going to make close to the old high on this thing. Yeah.
Okay, great. So if that's the case, then what I'm going to say to you is that the weekly chart is going to be absolutely imperative. I'm not saying that the daily is going to take you to a new all-time high. What I am saying is the daily has the potential to give you a buy signal to a buy mode, which should go to D. The weekly chart, the V-shaped pattern, is going to be so important. Why?
Yeah.
Because the 120-minute chart has just stalled for about 3 days, right at the 200-period exponential moving average of 251 point. Let me double check. 250. Give me 1 second. I'll tell you. It's 250. I can't see what it is. Okay, it's 250. Yeah, 251.14. So if that's the case, how the MDY crosses the 9-period moving average to get into the 251.50s, maybe 252 over the next 3 to 5 sessions. Maybe it'll take a week. It's going to be really important for the weekly chart, and there are a number of reasons, because the MACD in the weekly chart is still very poor. The stochastic is rallying, but it's not great. It's at 32%. And that monthly chart, gosh, I wish I could. Let me try to do it now. A, B, C, D. I've got E, and I think I've got an F. So 264 round number high.
Wow.
263. Yeah, I've got an E in the monthly chart, and the MACD and stochastic have turned down, but they're still pretty good, and it's desperately trying to hang on to the 9-period exponential moving average, and we've got another few days to go for the whole month of October. So I'm not certainly after B. I wanted to say, after being long, congratulations, after being long for years, I'm not the one that's going to get you out of this right now by saying, get out. What I am going to say to you, Jerry, is I don't think you've got to be in a rush. But as the week unfolds, if at any point this market suddenly turns down sharply, the Dow slides underneath 16,500, the S&P slides under 1932, and the comp index breaks under 4390, that MDY might break under 243, 242, and that's going to be the big test. Why? Because that weekly chart says if it starts to fail, like the IWM itself, the IWM was the the Russell 2000. I've got a peak F. It might change. I haven't had any reason to change it, yes, in the monthly chart of the IWM. I'm just going to say to you, we're going to watch this real closely. The next 3 days are going to be very important in relation to earnings coming out. Facebook comes out, a whole bunch of stocks that are coming out that are pretty important in the QQQ series, in the NASDAQ. The Facebook is not in the NASDAQ, but it's influenced by many of those stocks. So I'm going to be watching this really closely, and I think that it'll be maybe Thursday that we should talk again. Let's see how the MDY and the IWM are doing in the QQQ series. But so far, I'm not going to tell you should do anything. You're in absolutely the right position.
Thank you very much.
Hope that helps you. Thank you for calling, Jerry. Great to hear from you again. I'll be right back.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Folks, we had a couple of questions coming in the emails, so let me just go through this real quickly. Goldman Sachs, leg A up in the daily chart. Remember, it's called the gray leg A up. Why? Because it's not at all-time highs or recovery. It's just a recovery high, and therefore it is underneath the major high that was made in the last high of 189.50. It's trading at 182.96. So far, the technicals are improving a lot. This is still just a buy signal. I haven't got the buy mode indication. That weekly chart is going to be so important. XLF, same thing. XLF is in leg A, gray A, just above the downtrend line. And the weekly chart, this is probably, I would say, for clues. I'm not going to say I say every week is the most important week, but this is different. Why? Because it's the parameters. So as it stands right now, it's just leg A up. It's an outstanding leg A up, and the weekly chart is very positive candle, but it's not a positive technical situation. So it's very important to have your bank, to the financials, working together in concert with the other indices. Now, this is really important to me. If it's a very important week for two reasons. If the XLF closes underneath 2250, it's a 2304, Doesn't sound like much, but it works. It doesn't move very quickly, the XLF. If it closes under 2250, I'm really watching that weekly chart like a hawk. It's just so important that, in fact, instead of closing it under 2250, it closes over 2350. That would be really important. It shouldn't, 50 cents, 45 cents, shouldn't be a big deal to get there. So I'll be watching that. Now, here's the other thing. Another question, very good question. So that was Bob. And Sarah asked in the Dow, is it going to be followed by a C, D, and maybe even an E? And the question is a legitimate question. And all I can say is that you've got Larry Persevento coming up next. So Larry's going to be covering it and using his Gartleys and butterflies, etc. So I think it's really important to get some kind of perspective based on other techniques. My technique is saying the VIX is at 17%. If VIX closes at any point in the next 2-3 sessions underneath 15.70, this market is going higher. If the VIX suddenly starts to rally and goes above 1830, it's at 17 right now, 1830, and closes above 19, that's going to start to really hammer at the market and start to see the sectors pull back. So I'm going to make it real clear. Those are the two questions. And the other question, and the other question, which is a very important question, is the strong sectors like the IBB. What's going on there was the question. And the question is, we have been long, in my opening call, we've been long one stock that's doing really well. Earnings come out tomorrow. We're going to have to watch it. But we've also been long the 200%. The IBB, NASDAQ, biotech sector, and it's just done fantastically. And look what's happened. It is, even now today, it's only down $1.4 at 287.30. It is reluctant to give up anything. When it starts to do that, it's going to be real quick if earnings come out, and they are very poor over the next week in these biotechs. So far, it's all-time highs on Friday. That's a good sign. So let's just put this perspective into some kind of context as to what you can watch. The Dow is down 29. A little volatility. That's what I was expecting today. I wasn't sure we'd get a new high, a recovery high. We got it. This means we were still in leg B in the Dow. Maybe it's going to be a peak A in the S&P. We'll watch this closely. But so far, the level to watch is 16.610, 16,006. Let's call it 16,600 to 16,580. A close below that in the next 2 days would be negative. On the upside, a close, even today, it's very positive action, but I would like to see 16,870 tested in the next 2 days, and that'll be very positive for the Dow. So far, the daily's acting very well. We'll watch the weekly. Stay tuned for Larry, and I'll be back tomorrow. Don't forget my opening call, my daily newsletter, and I'll be back tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.